it's really important not to look at the war in Ukraine, the Russian invasion of Ukraine, as purely a humanitarian crisis happening in a remote place. It's a big wake-up call for investors in that it has systemic implications. It's driving up energy prices, and that's contributing to inflation. But it's also threatening what political scientists like me call the international order and the international system, which is why you've seen such a strong reaction coming from the 30 NATO member states, the European Union, and indeed the United States, working in conjunction with its transatlantic partners. This is the biggest geopolitical disruption probably since World War II, and not enough companies and investors are asking the big questions. What I often get behind closed doors when I'm talking to boards, for example, is, are we all going to die? Because it has to be said that this conflict involving one country, Russia, which has nuclear weapons, as well as a chemical and biological weapons store, could quite conceivably go down the route of involving what are called unconventional weapons, tactical or strategic. It won't make them review their asset allocation, their exposure, their capex plans, etc., if they assume, as some do, that this conflict will be short and will go back to normal and sanctions will be rolled back. You would only think that if you hadn't looked at the trajectory of other conflicts and you assume that the consequences wouldn't be systemic. Part of what the message I gave in our panel today was that investors need to raise what I call their PQ. You've got EQ, looking at your emotional IQ in terms of management. We have been through a pretty peaceful and prosperous period in this last 30 years. We now have had a wake-up call, and geopolitical fundamentals impact the more traditional economic market and the other factors that influence the investment environment. So time to pay attention. Among the myths that were exploded during the course of the Russian invasion of Ukraine was the notion that countries that were integrated into the global economy, the global financial system, like Russia, wouldn't undertake such a move given how costly and disruptive that it would be. So that has been exposed as a fallacy. A lot of countries and leaders, particularly but not only Germany, kind of looking at themselves saying, how could we have got it so wrong? It naturally will follow. How do we need to think about engaging with other, complex regimes where there are not only human rights violations, but let's say no free press, which will have contributed to the Kremlin's ability to sell a different narrative entirely to the Russian people about Ukraine as a supposedly Nazi regime led by a Jewish president, indeed. So this is something that I have been calling for in my research over the last 20 years. What I find, though, is that investors are unsure about how to differentiate between a China and a Russia, a North Korea, or other permutations, Saudi Arabia, maybe even Turkey. But in fact, there are tools that can be used to think about this. And instead of thinking in kind of normative terms like democracy versus autocracy, the Russia crisis tells us, in particular, to be very careful about kleptocracy, where the state controls the assets and a small group of members of elites control those assets.